right, welcome everyone. So this is the next part of our series here. We're going to be talking about trading plans. In the last couple of videos, we've talked about how to structure your days, discipline, and trading plan. We've mentioned about it so many times. So just in case if you didn't know how to create a trading plan, we're going to go ahead and show you how we have ours. And so grab the ideas. It doesn't have to be exact. Again, no one trades the same exact way as the other person. Both of us, we trade very similar, but we have our slight differences. And you're going to see that in our trading plans today. So modify everything that we're talking about, modify it to your trading strategy, to your trading style, and then use the trading plan that way.
Exactly. What's going on, guys? If there's one video that you guys want to take notes on, this is probably the one. Just so that you can write down your own trading plan and figure out what works for you, and maybe write down what we're writing down or what we're saying, and then go back and edit it. But this is a good one for you to get a pen and paper, and let's get it going.
Absolutely.
Okay, so one thing that you got to understand when it comes to trading plans is this needs to be, especially when you're just starting out, needs to be strictly like right in front of you every time that you take a trade. Every time that you go into a session, you need it. There's no way around it, because if you don't have a trading plan, your trading is going to be all over the place. The whole point of it, and when you first get into trading, you're initially thinking that every single trade is like make or break for you, right? Where like, this trade that you're currently in, if it's got to work out, and if it doesn't, my whole career is going to blow up. Obviously, that's very exaggerated, but people think that way. Now, you got to think in terms of having the trading plan and knowing that every single trade that you take throughout the week accumulates, or all those trades together make up that trading plan for the whole week or for the whole month, for the whole year. And that's why it's so important, where like not every trade is make or break, where you could take one win here, all right, great win. The next trade could be your setup, but it's actually a losing trade and you're going in the drawdown, but you're managing risk because you know that the next trade that you take with that same setup is probably going to work out. Right, so you need this trading plan. Now, at the top of my trading plan, I like to have the goal of my trading. As I said, you got to keep this thing right in front of you every time you trade. We've mentioned it before, as far as like looking at your goals every single day, but it's good to have your goals on your trading plan at the top of your trading plan, so you know exactly why you're trading. So it's a long-term thing, not a short-term gratification or short-term profits, whatever you want to call it. Just write down a few different things of why you're actually trading. And if you need help finding that why, go back into our last video about finding your why in trading, and that should help you out. But this is all subjective, all up to you as far as what you want to put on there for your goals. But something that I have to the right of that is just a couple quick things that I have written down, just quick reminders. So one of them is, as a scalper, I have 1 to 2 opportunities to take a trade. That's it, right? I have 1 to 2 opportunities. So now I have, going into my session, I know, okay, I can only pick 2 setups that I like. Are these going to be high probability setups, or am I going to settle for, a shitty setup that's probably not going to work out, or you just want to be in a trade, or you're not seeing your setup all session, you've been trading for 3 hours, and you know what, you're just like, I see the setup, it could probably play out, so I'm just going to take it. So you don't want to take them on those. You just have 1 or 2 opportunities, and that's it. And second thing that I have on there is you're in it for the long term. Now, looking at my goals, I don't really have to write that down, because I know from my goals that that's what this whole thing is all about, is you're in this for the long term. And that's about it as far as like some of the stuff that I have written down there. Now under this, you're going to have 3 different boxes. Now under this, we're going to have 3 different sections right here. And the first one is going to be time frames right here. And for me as a scalper, you can put 30-minute, 15-minute, as a starting out trader, when you're just starting out, focus on the 30-minute and the 15-minute. The next little box that you're going to have over here, I have all these divided, kind of like a line right here. And then the next thing I have right next to that is trading times. Very important, especially as a scalper.
And I think you should have trading times regardless of, whether you're scalping or not, because it's really going to structure your entire trading.
Exactly. We say it all the time. You don't want to be a slave to the market. You want to be able to control your trading style. You want to be able to control your times, and you want to be able to work your trading around your life instead of the other way around. So trading
Absolutely.
times for me, I live over in New Jersey, so we're Eastern Standard Time. So I trade pre-New York, 6:30 a.m. to 9 a.m. And then I have written under that, can take a trade. I'll get to this in a second. Okay, so I have 6:30 to 9 a.m. And then if I don't catch a trade in that time slot right there, then I have the opportunity to trade until 11, which is the London close. So I know I have volume from 9 o'clock to 11 o'clock if I didn't get any of my opportunities. Remember I said 1 to 2 opportunities. I wish it showed it as I was typing. All right, so the last little column you're going to have to the right is going to be your pairs. Which pairs do you focus on? And then we'll draw our little separator right here. For me, it's going to be GJ and gold. And that could be whatever. Okay, so under this, so that's going to be your trading plan over here. Your trading strategy is going to be below that.
And this is a strategy that doesn't change, or like any part of this trading plan doesn't necessarily change from trade to trade. These are the conditions that Stefanos is setting for himself, regardless of, you know, whether he's taking GJ or whether he's taking gold.
These are standards, basically,
Right.
that you have in the market, just like you want to have in your life standards.
Please have standards.
You want to have standards in trading.
Yeah.
Okay, so setups. There's a couple different setups that I like examples for you. So break and retest, classic break and retest, whether that's on a 30-minute, the 15-minute, whatever you're comfortable with. Really depends on the pair, because sometimes you could grab that break and retest on a 5-minute on GJ or gold. Then you're gonna have like a breakout trade.
So that's like when your price is consolidating and then it finally breaks out of it, then how do you take that impulse trade is what some people.
And then what I have to the right of that, or like in parentheses, close above support or resistance. Close below support or above resistance. So you need to wait for that close before you can enter that trade. So these are just two little examples. I have a bunch of other setups that I like, but mainly these are the ones that I'm looking at. So in between those is going to be your entry. Please have standards. All right. So a couple like little reminders that I have for the entry. So if it's the perfect setup, do not hesitate. Now, a lot of you guys hesitate when you see your setup and you're like, wait a minute, I need to wait for one more confirmation. A lot of times you're not going to get that confirmation. It's just going to happen and you're going to miss the trade. So if it's your perfect setup, if it's all the things that you're looking for that you have in your trading plan written out, then you need to take that. Do not hesitate. Hesitate on the trades that either you're trading live with someone and it doesn't really make sense to you, or it's just like a random setup that you see. Live back test that and journal that and make sure you see that 3 or 4 times before you actually take it in the live market.
Or a lot of people, they wait for too many confirmations. So it's like, you know, what you said, like if I get one more, and then it's like, okay, one more, and then they end up missing the entire move.
Exactly. It's happened many times too. I'm sure everyone.
Yeah.
Next thing you want to do is you want to look at the time. What time is it? Are we coming up to the New York Open at 8 a.m.? Like, do you want to wait for that hour to close, or you know, is this like 7:45 where you know we're gonna get some nice volume, especially on DJ and gold? The next thing you want to do is study the candles and the wicks. And what I mean by that is look real quick and do a quick glance over the last previous candles. Pretty self-explanatory. You know, it's you just look at the wicks, look at where price is rejecting, look how many times it's rejected, look at the, you know, the area to the left. If you can mirror that area, you know, there's many different things that you could be looking at, and just take a second to just look at those things instead of just rushing into your trade. Plan your trades out, plan your session out. And you know, you want to spend about a half an hour to an hour before your session where you're really just like getting yourself situated. You're looking at the different charts, reading over fundamentals, getting really ready for what's about to happen, just so that you're not rolling out of bed and you're just like, holy shit, there's a trade. I'm just going to take this,
Right.
you know, within 5 minutes of being on the chart.
Right.
You know, that's something you don't want to be doing. Yeah, one thing that you really want to do is make sure that you're looking over all the time frames real quick, because you could be trading for 2.5 where you did the top down analysis, but it's been 2.5, 3 hours that you didn't take a trade yet because you didn't see anything you liked. Now all of a sudden the 4 hour looks completely different than it previously did. So maybe you need to look over those, and that should take maybe 8 seconds of you just really quickly going through daily, 4 hour, 1 hour, 30-minute, 5-minute, 15-minute, 1 minute, looking at all these different time frames just to quickly glance right before you enter that trade, because maybe you'll see something that'll hold you back. Great practice doing this right over here. And then finally over here, you want to check the range and price. So you want to make sure that you want to make sure that you have a big enough range to trade in. So if you're a scalper and you're only looking for 10 pips, make sure that the range you're trying to get those 10 pips in, you have at least 20 to 25 pips in there of a range, that like that size of a range where you know realistically you can at least grab 10 pips. Right. If it's a 15, 16 pip range, I know I can at least grab 7 to 8 pips out of that. You could squeeze them out of that. So these are the two things so far that you guys want to be paying attention to, is the setup and then the entry. The last thing over here is going to be the exit.
Your trading plan should basically be like a checklist for you. So when Stefanos is looking at his strategy, when he's looking at his trading plan, he's checking off as he goes, pretty much. It's like a mental check off kind of a thing. He looks at the setup. Does he have a break and retest, or does he have a breakout trade, right? And then he moves on to the entry. Then he's like, okay, well, out of those two, let's say, for example, there's a break and retest. Then he's looking at, is it a perfect setup? Yes, it is. Don't hesitate. Go for it. Look at the time, study the candles, check the time frame. If you can check off every single one of these, then it's like, all right, here's my entry.
Exactly. And a lot of these can be done, like the goals that you're trading, just overlooking this. This could be done before your session. A lot of these things, should be in your head. Now, eventually, I don't want to really say this, but at the same time, it's just good for you guys to know. Eventually, you don't have to be looking at this every single time. It's good practice. It's great practice to do it as long as you can. But eventually, the longer that you trade, this is going to be engraved in your head. And you're not going to have to look over this. But it's always good to have it. Like I still have my trading plan like on my wall right here. I really don't look at it that much because I have everything in my head. I know what I'm looking for. But it's still good to have that checklist of things to do. Just like we have to be robots in our daily lives as far as having that checklist of things we need to get done that day. We know the things we got to get done that day, but it helps to look at something on a piece of paper and check them off. You get that quick dopamine hit of checking things off when you get things accomplished or get things done that you wanted to get done. So it's the same exact thing with trading, and make sure that you keep that practice going as long as you possibly can as you're trading. So as I was saying, you got setups, you got the entry, and now you have the exit. So like I said, before your trading session, you want to look at the market, you want to look at fundamentals, understand what you're doing, and really have a plan for the session. If price does this, I'm doing this. If price does that, I'll do this, right? And just be fluid in the market, as Raquel would say. So now, let's say you have that trade coming up, and it's like, all right, the setup's coming, we're ready to go. Now you need an exit strategy. You can't just have that trading plan and go into the trade. Now all of a sudden, you have no idea what you're going to do if price goes the opposite direction. You need to know, okay, if price passes the low, if I'm going to buy past the low of the previous 15-minute in the opposite direction, I'm closing 50 automatically, right? That's just one example. That doesn't have to be yours. What I have written here is you want to...
And notice the entire analytical approach that we're taking here too. So there's no room for emotions. I mean, you have this entire strategy checklist. There's no emotions whatsoever. If you can check that off, it's like entire analysis, right? If you can check that off, then take the entry. If it doesn't check off, if you're looking for 10 pips, but your range is only let's say 5 pips, then obviously you don't have a trade, right? Keep it as analytical as possible. That's all the market is.
This is your business, and you want to treat it like your business, right? We say it all the time. You probably said it in every single video we've done. But listen, cut your losses short and no hesitation. If you have that exit plan, there is no hesitation. And like I said before, your trading plan, the whole week of trades makes up that trading plan. It makes up a successful week for you. So you want to be able to cut your losses short on trades that you know are not working out and aren't working out the way they normally do. Cut 50 off, cut another 50 if you want, but make sure that you're doing that every time that you say you're going to do it. Now, something on a side note that's going to build confidence for yourself is saying you're going to do something and sticking to it. That builds confidence. Slowly and steadily builds confidence. So it's going to be the same thing in your trading. The next thing that you want to do is, like I said, exit if you feel uncomfortable. Now, if it's, cutting 50, you're cutting your losses short, all that good stuff, same exact thing. But if it's a trade that this is a little bit different, because if it's a trade that that you just entered and you're like, maybe I shouldn't be in this, just cut the thing. Cut it off. Because most of the time you're going to lose those trades because you know that that's not really your true setup. Just exit it, analyze it, journal it, see how it plays out, and then next time maybe you can start adding that trading setup in your arsenal. And now under here for the exit, let's say, for example, I have secure at 10 to 15 pips. And then under that, you can have multiple different, if it reaches 30 pips, you're going to secure another percentage. But it really depends on each trade, right? It's not going to be every single trade looking the same exact. This is basically the trading plan. Now under this, I have 3 different things. So I have money management. So basically risk management is going to be risk 1 to 2% per trade, right? So that's going to be one of your criteria. You got to risk 1 to 2% per trade. Now, eventually I'm going to get into this in a second, but as far as evolution of your trading plan. But for right now, as a beginner trader, 1 to 2% of your trade. To the right of that is going to be implementation. And under that, I have 100 back testing trades per pair.
That's a minimum.
That's it. Yeah, that's a minimum.
Yeah.
I have actually on mine sessions. So I have 100 back testing sessions on like a simulator or just, 1 hour session of me just back testing. And normally for an hour, that really covers a whole actual, let's say, New York session. So that's something that you guys want to do for each pair. I did put trades just to keep it basic for right now, but when you guys really get into it and you guys, let's say you're not maybe working right now and you have a lot of time on your hands, make sure that this is sessions. You guys want to be the best. You guys want to be the best trader you could possibly be. It's got to be sessions, right? And you got to embrace backtesting. This has got to be something that you love to do. Now, most important part of this trading plan is you signing it and dating it, right? This is something that, you're sticking to every single day. And if you sign it and date it and you don't stick to it, you're not sticking to your word and you're going to start losing confidence in the market and then your life, and it's just going to snowball. So signing and dating it, very important. The unfortunate truth is that most people won't even have a trading plan. Second, most people will make a trading plan and they will deviate from it after a day or two, right? So they think that they're looking at this trading plan and this is the only way or the only trading plan they're ever going to have, right? And that's just not the case.
I create a new one every quarter.
You create a new one? Okay. That's awesome. So Sharma makes a new one every single quarter. That's awesome. I like that. So you don't have to stick to this every single time. Eventually, you're going to start adding pairs, right? Maybe you can add a session into your trading times. Maybe you can start, let's say, I always say that, as a scalper, if you come into the markets as a scalper, your next level of trading is swing trading. So learning how to trade on the higher time frames. If you come into the market as a swing trader naturally, your next challenge is learning how to trade on the smaller time frames, right?
Or even position trading.
Yeah, there you go. Anything. You can be changing things up and really getting used to, different styles of trading. Now, the one thing that shouldn't really change is goals of your trading. These need to be really stronghold, and it's got to be bigger than yourself. You need to have that why, and then you need to have a strategy behind it. And this really is a strong strategy for your trading. Now, also, you're going to be able to add setups, and that's about it, I would say. You're not really going to edit the entry or the exit. That's always basically going to remain the same. But setups, you're going to be able to add to. You're going to be able to add to pairs, trading times. Like I said, you can maybe add the Asian session or the London session on there as well. If that's something you want to master. But I'm taking up too much time on my own. Time to Sharma's.
Oh, there's a few things that you mentioned. The very first thing was when you first started talking about goals of trading, and you mentioned how we've talked about having goals in your life, right? And so it's the same exact thing where there's goals that you set for yourself. Personally, for me, I set a goal for myself. Like there's a goal for my business, there's a goal for my personal growth, there's a goal for my trading. There's a lot of different goals that you have. But I keep goals, I change goals every year, right? So I know in the beginning of the year, this is what I want to accomplish this year, and this is what's going to help me get to that bigger goal, right? Let's say my bigger goal for the new business that I just started is I want to be able to turn that into a multimillionaire, right? And how do I get there? I don't get there in 6 months. I don't get there in 1 year. So every year I have this plan for myself for that business that, okay, it's my first year. I just started this in July. By the end of the year, in one of the past videos, we talked about how I want to scale my business up to $500,000. That's how much I want to make by the end of the year. How am I going to get there? Right. And then once the year is over, then I make another, plan for, okay, I've hit this one milestone. And then how do I continue on? In your trading plan, you're not into trading for a year or for maybe 2 years and it's like, all right, move on, go do something else. You're going to be part of trading. You're going to be trading for a very long time, especially if you're in it, primarily reason being your financial freedom. And so for that to happen, you need to look at trading as if it's not an end goal, but it's just a milestone. You're never going to have end goals in trading. You're always going to have milestones, right? So that was the first thing that you mentioned. And that's the same exact thing that you should be approaching your trading plan with. Think of milestones that you want to accomplish. What's the overall arcing goal of your trading? And then the second thing was, yes, you're not going to look at your trading plan every single day. In the beginning, you should be. And it's the same exact way that you do your technical analysis. You're always, doing your entire top-down analysis, marking off every single zone. You're looking at where's price going. Maybe you're drawing out structures. Maybe you're using a trend line to see, visualize what the market's doing. But eventually, maybe you're spending 20 minutes, 30 minutes in the beginning doing your entire analysis. Over time, the more you practice it, then eventually you're going to come down and you're going to do the analysis in like 5 minutes or 10 minutes. You go back and take a look at any of our weekly Outlook videos. How much real time do we really spend on those breakdowns, right? When it comes to technical analysis, how much time is Stefano's actually spending there? Maybe 5 minutes and 10 minutes. And that's probably because we're talking in the middle. We're pausing, we're going back, we're trying to show you levels. But if Stefanos was just doing the analysis on his own and he was not recording or he was not talking out to to us, then he'd probably be done in a couple of minutes. And that's the same exact thing with the trading plan. You're not going to look at it every single day. Eventually you're going to get to the point where you're like, okay, I know what I'm looking for. I know what my time frames are, right? I'm scalping, I'm looking at 30-minute, 15-minute. I know what my trading times are. I know what my pairs are. You know your setup, you know your entry. But once in a while, you're going to come back and you're going to try to modify things according to your goals. And that's exactly why I have a new trading plan every single quarter, because I watch different pairs every quarter. I try to incorporate a different pair, right, for different reasons. Most of the time, like I said, I've done scalping, day trading, swing trading. I've also had, 1 or 2 position trades. So I'm always trying out different styles. You never have to be like just a scalper or just a swing trader. Right? Exactly. That was the third thing that you mentioned, that you're always your next step should be, if you're scalping, go into swing trading. If you got into trading as a swing trader, go on to try to figure out how do you catch the same exact move on smaller time frames. And that's the same exact thing that I do. So in trading, you're always going to try to better yourself. Your education, your knowledge never stops. With that being said, I'll go ahead and move on to the trading plan.
Exactly.
But
what Sharma was just saying too is, and it gets into like challenging yourself all the time, and that's the mindset that you want to have. Always be challenging yourself to be doing better, to learn more, to get in a rut maybe, and figure what or climb your way out of it. Constantly challenging yourself and getting better at whatever it is that you're doing. Doesn't have to be trading.
Absolutely, there's no stopping at all.
No.
And so for me, I don't have like the goals of my trading up top. That is definitely something that I'm gonna steal from you, Stefano. I'm gonna incorporate the same thing. But what I do is I write down the time frame. So I'm gonna show you guys the one that I had from the beginning of the year, so January 2021 to March 2021, right? So this is my first quarter trading plan that I had for this year. And so by this point, I already understand what's happening from a fundamental perspective, macro fundamentals, when it comes to the different pairs that I'm trading. And so I write down the timing. This is the time frame that I'm using this for. It kind of, keeps me structured in a way. And then I move on to the next thing for me is trading pairs. So this is where I do like trading pairs, and then I'll do underneath that, I'll do GJ. And then I also had EJ at that time. But I also write down what are they for. So this is EJ and GJ, they're for scalping. And then I had GBP USD, which is for swing trading. And then I also had USD SEC, and that was for position trade. So I'm going to go ahead and explain why do I have so many pairs. The very first thing is at any given point, I'm only looking at 3 pairs, right? Whatever it is. So for EJ plus GJ scalp, what that means is either I catch a scalp opportunity on GJ or I catch a scalp opportunity on EJ. If the pairs are moving very well, let's say both of them are breaking out of a consolidation, there's great potential, I only get to pick one, right? Whichever one that I want to go with. And that's the scalping opportunity. So this is me going from like swing trading and then breaking it down. I've already done the position trade. And then I have like a couple of notes down here too for USD SEC. that the USD SEC movement was almost done. So all I'm doing at this point is minor scaling, but mostly I'm scaling out. That's the only reason why I have USD SEC here. I was already in this position before Q1 of 2021, and now all I was doing was scaling out. That's the only reason why I have that pair up there. And I'll like leave the little note for myself down here as well. And then GBP USD was one of the main ones where I was swing trading this. I was looking for those opportunities. But GJ and EJ, again, it's only pick one. If there's a 100 pip move on both of them, pick whichever one that you're more comfortable with. In this case, if I'm swing trading GBP USD, the chances are I'm going to go with GBP JPY. The reason why is because I have the common denominator in both of them, which is GBP. I understand from a fundamental perspective exactly how GJ is going to move and exactly how GBP USD is going to move when it comes to GBP's fundamentals.
Now, why these pairs at that time? So you were saying January to March.
This was around Brexit time. Brexit had just gone over, but still we had a lot of volatility during that time. And then even from a USD perspective, this is when Biden came into the office, right? But there was a lot of stuff that was going on with Biden as well and the entire Biden administration. So there was a lot of fundamentals from USD perspective, attacking COVID and all of that was going on. And then also from a GBP perspective, same exact thing. There was a lot of stuff that was happening politically, Brexit, and there was also COVID that was happening. GBP was, or UK, I should say, was actually a leader when it comes to mass vaccinations. So you had a lot of like back and forth that was going on, right? You had uncertainty from COVID, and then you also had uncertainty from political perspective. And so that's why I chose GBP USD and then GJ as well. And one other reason was that already in 2020, USD was on the brink of falling off as a world reserve currency. And then we saw JPY strengthening. And so I knew that whenever there was going to be any uncertainty related to USD, we were going to see a strength in JPY because that's where the investors were going to go. And then USD SEC was a position trade because that's an exotic pair. So exotic pairs like this, they're mostly dominated by the major pair, which is USD. So if I can understand the USD fundamentals, I already know what's going to happen with the USD SEC, right? So anything that's coming out of SEC, out of Sweden, it's not really going to matter as much when it comes to some of the higher time frames. So that was one of the easier pairs to start off with position trading because you don't have like two currencies that are battling against each other for the strength.
Is this something new that you implemented this year? Is the position trading?
No, so USD SEC position trade, I was already taking this back in 2020, and that's where I started off the position trade. And so I had put myself a little note here that USD SEC is simply managing trade and then mostly scaling out.
Oh, nice.
That's it. And then after that, I have the trading sessions, exactly how you have your time frames and trading times. Instead, I have trading session here, trading session. And then I try to only stick to one session. So GBP, and even here, I'll write down exactly what pairs can I trade in which session. So GJ and EJ, for example, that would only be and GBP USD actually. So I'm looking for these trades in pre-New York. And then for USD SEC, if I'm looking for any scale outs, then it has to be at NYC Open, after NYC Open. So those are some conditions I set for myself that if I'm looking for a trade for GJ or Euro JPY, GBP USD, then I'm looking for these trades in the pre-New York session. And then I want to be able to carry out these trades as soon as NYC opens. So that way I'm able to turn these scalps into a day trade or even into a swing trade opportunity. But again, the focus with GJ and EJ is that they're primarily scalps. So by the time I'm done taking my 20 pips, 30 pips, that's what, again, scalping is subjective. So you may have caught that right here, where Stefanos, he looks for the 10, 15 pips. I go for the 20 to 30 pip range. I want to catch 20 to 30 pips, and that's what scalping is for me. So I want to be able to catch 20 to 30 pips at that scalp, go completely risk-free, secure like 50%, maybe 70%, depending on the conditions of the market at that time, and then just let the rest of the trade run and then turn that into a swing trade opportunity. For GBP USD, it has to be in pre-New York or leading up to NYC Open. So then I can turn that opportunity into a swing trade opportunity. And then after that, I have my goals, but my goals are a little different than the goals that you have up top there. So my goals here are for GJ and EJ, I want a 5% equity increase per trade. And so that's why I go for the 20 to 30 pip range, because I'm looking for a 5% equity increase per trade, which isn't that bad if you're only risking between 1 to 3%. So even if you risk 3% and you're looking for that 1-to-1, you're still making 3%. And then for GU, I'm looking for a 15% equity increase per trade. So since this is going to be a swing trade opportunity, that basically means by the end of the week, I'm looking for a 15% equity increase, which again, isn't that bad. If you break down the 15% in the trades per week, again, all I need to do is make 5% equity increase 3 times a week. That's it. That's pretty much it. And then
Awesome.
USD SEC was, since I'm scaling out, is 20% equity increase per week. So every week when I'm pulling out, I'm only looking for a 20% equity increase, and all of these are minimums. So there's been a lot of people, like even on our live sessions, I've had people who make like 7%, 10% equity increase solely based off 20, 30 pips. And it comes down to how much you're risking and also like your stop loss and what kind of moves you're catching. So I almost never trade in consolidation. And so that's why I wait for price to break out of the consolidation. And usually when it breaks out of consolidation, that's your breakout trade that you have here. So when it breaks out of that, there tends to be a lot of volume. And so that's why I'm able to turn those scalps into swing trades, just riding the volume. That's it.
That should be big for a lot of you guys. When she's saying that she doesn't trade in consolidation, maybe you shouldn't either.
Yeah. And then after that, I have risk, which is pretty much the same thing that you had, Stefanos. So I'll go ahead and put that up here. So you could have this in any order, really. It doesn't have to be in a specific order. But I actually broke this down in months. So January, since everything had happened with Brexit, everything that happened with COVID, trying to bring in more optimism and all of that. So in January, I was only risking 2% of previous day's profits. Sorry, I'm going on to your side a little bit.
Okay.
But January was 2% of previous day's profits. So another thing is, if you're just starting off when it comes to your risk, then don't worry about previous day's profits, but only risk 1 to Stefanos has 2%, I say 3%, whichever one is fine. But you shouldn't be risking more than that of your account size. So if you have a $100 account, do not risk more than 3% at a maximum of that $100 account. And then eventually when you start building your account, so for example, for me, the way that I started increasing my risk was, or actually I transitioned from risking my account to risking previous day's profits, was I start off with $100. And then eventually when I flipped that to $5,000 or $10,000, that's when I went to, okay, now I can switch to previous day's profits. Again, the bottom line of investments and finance is, put in as little money as possible and have greater returns, have a better return on your investment. So all I do is really just follow that. And then in February,
and do compounds.
Exactly. And then February to March,
the 8th wonder of the world,
I had 3%. So that was my maximum. So my risk here, all my equity goals are minimums. My risk is maximum. So in January, I was only going to risk maximum of 2% previous day's profits. And then February to March, it's maximum of 3% of previous day's profits. So that's how I break it down. And then even in that, let's say throughout January, I told myself that every trade that I'm taking is maximum 2%. Now, before I go in, I need to have the understanding of whether I'm going to be looking for additional scaling opportunities, or is it just one opportunity and all I'm doing is scaling out the entire time and then maybe trading my stop loss. That will determine how much risk I'm going in with. So in January, if I have a 2%, and let's say I say I'm only looking for a 20 to 30 pip scalp, that's it. I don't even see the opportunity of GJ or EJ turning into a swing trade. Then I go in with the 2% in the initial trade. Once I hit that 1-to-1 mark or 1.5 to 1 mark, that's when I close 50%, and I just let the rest of it run. When it comes down to February, let's say 3%, same exact thing. I need to know before I go in, am I going to scale in or not? If there's a possibility, I'm telling myself like, okay, there is a possibility that maybe, price breaks out of this consolidation, it'll come back to retrace again a couple of times before it goes to my ultimate TP level. then I'll go in with 1%. Even if I don't get the scaling opportunity, that's perfectly fine. But that was my analysis before going in, that there is potential opportunities that I can look for. So never try to force your risk. Never try to already know going into the market that this is exactly what's going to happen. Just have your checklist like we do here, and then let the market do its thing. You can never predict exactly what the market's going to do. And then I have conditions set here, which is again just 1 to 2 trades to proper entry, or 1 to 2 attempts is what I have the entry. So what that means is the same exact thing for position trade, swing, and scalp. So if I'm looking for a scalp opportunity, and let's say I have my first attempt to entry, it didn't work out, it came back, hit my stop loss, or maybe I lost confidence in it, then I only have 1 more attempt left for that session. If it doesn't work out, then I come back the next day. It doesn't matter if price, blew like 100 pips into my way after that or not. If I'm out, then I'm out. Same exact thing with swing trading. In swing trading, I don't take a swing trade on Fridays because I don't want to enter something that is probably like 20 or 30 pips into profit before market closes, and then I'm accumulating swap fees over the weekend. So I'd rather catch a swing trade opportunity on a Monday, Tuesday, Wednesday. The latest is probably Thursday, given that there's potential to maybe go into 50, 60 pips of profit by NYC on Friday.
Do you have a pip amount that you aim for on swing trades?
Yeah, so minimum I try to go for is about 70 pips on swing trade opportunities. And that's given that the market's very slow that week. There's not much happening from a fundamental perspective. Maybe the following week we have monetary policy statement or something like that coming out. And then I have my strategy, which is very similar to what you have. But again, this is like a check mark thing. So my very first thing is going to be entry on 30-minute upon confirmation from 2-hour and 4-hour. So I use the 2-hour time frame instead of the 1-hour time frame mostly. So my first requirement is my entry is only based on the 30-minute after I get the confirmation on the 2-hour and 4-hour time frame. If on the 30-minute, I'm looking for a buy opportunity, but the 4-hour is still bearish and the 2-hour is still bearish, and it's like projecting some resistance, then I don't have a trade opportunity. My time frames are not aligned. I need to wait until they're aligned and then take the opportunity. And this is where majority of the patience comes in too.
Yep.
And then this is the break and retest. So that's what the BR stands for, of significant level on 2-hour time frame, or a correction of the heavy buyers or sellers pressure. And I will just say movement to the left, right? So I just explained it. So that's what this is. This is a correction of the movement to the left. So if there's a massive sell-off that's happened recently, when I'm looking to the left, then I'm looking at, is this simply a correction? So you could have either you have a break and retest of a significant level or a correction of the movement to the left. I have both of them, so that gave me more confidence in my trade. And then the third thing is confirm daily and weekly. So I'm confirming with those time frames as well, trying to see where's price headed. Sometimes when we're looking on the 30-minute time frame, 1-hour time frame, and you don't really go anything higher than that, and you're trying to turn a scalp into a swing trade specifically for this reason. If you're trying to turn a scalp into a swing trade and you don't go onto those higher time frames, sometimes your trade is going to move, play out for maybe 20, 30 pips, but you don't realize that, okay, I've come to a weekly resistance. And then there's just a massive rejection. You don't understand what happened because on the lower time frames, you're like, well, there's clean movement to the left. Yes, but you didn't notice on the weekly time frame that this was a major resistance or support level. So that's another thing that I watch out for. So that's my strategy. And then I also have, further conditions set for myself. These are just notes. For GU, no less than 4-to-1 risk to reward. So if I'm looking for a swing trade opportunity and I'm entering that position, then I'm not looking for anything less than 4-to-1 risk to reward. If it's a 3-to-1, 2-to-1 trade, then I'm not taking it because it's not a swing trade. And that's what I've set myself for when it comes to GU. I'm only going to trade it for a swing trade opportunity. So I'm only looking for 4-to-1 risk to reward, and then also minimum of 60 pips.
Now, you specifically, I know like scalping is much different than swinging and position trading. So if you have that 4-to-1 and it's a swing trade, do you secure it all on the way up, or you just let it run?
Yeah. So I do the same exact thing where it's like once it hits that 1-to-1 or 1.5-to-1, I secure like about 25%, 30%. And then because this is a swing trade opportunity, so that amount But if it was simply a scalp, then I would do like 50%, right? So it depends on scalp versus swing. And then from there, as price starts to follow structure, which is, let's say it's increasing bullish, and then it starts to make like higher lows or higher highs, that's when I start to secure some more and then look for scaling opportunities, simply following the structure.
Makes sense.
And that's pretty much it of what I have in my trading plan. So I have my trading pairs set off. So I'll go and do the arrows too. So I have the trading pairs, I have the timing, and then I also have any notes that I want to keep myself. I found this to be the most helpful in my trading plan ever since I started incorporating this. This was not from the beginning, but I started doing it just because when I look at this, I want to do like a check off kind of a thing as well. That, okay, this is simply for a scalp, this is simply for a swing, this is simply for a position trade. And then also putting down exactly what trades am I going to take in which session. So I could just put down pre-New York and NYC open, and then I'm just sitting there all day looking for a GJ or EJ trade. And it's like, well, my timing has already passed. So this also comes from the back testing that Stefanos was talking about, like about 100 back testing sessions. That's where you're going to figure out like, okay, what pair moves the most during what time, right? Sometimes it's not going to move in Asian Open, but it'll move like maybe 2 hours into Asian Open. But you kind of learn that through live back testing or just like back testing on a simulator or something like that. And then the goals, I like to put down numbers a lot in my trading plan because that's how I quantify the progress. That's another thing that I do. And I do the same exact thing when it comes to, outside of trading goals. I like to quantify, I like to put numbers, I like to put percentages. And then same thing, so 5% equity increase. You break that down into one trade per week or something like that. So you don't have to do like per, 5% equity increase per trade, but you could do something like per week. And then you could break that down into every day. All I need to do is make 1%. That's it, right? And the same thing with GU and then USD SEC. And then put your risk down as well. So you could do it for per pair. Maybe you could do GBP USD like 2% or 3%. And then like gold maybe 1% because it's a lot more volatile. Or you could break it down in months. I did it in months because of the fundamental perspective. And then also keep conditions for yourself. But basically the point is, I'm going to end up repeating the same thing that Stefanos has said. But basically the point being is keep your trading plan in a manner that's a checklist. You look at it and all you have to do is like, to have a break and retest, do I have the entry confirmation on 30-minute? Is this an impulse trade? Is this a breakout trade? Is this my perfect trade? Is this giving me a 4-to-1 risk to reward? Those kind of things. But the way that I have my trading plan structured is it makes me focus more on the risk perspective, on minimizing my risk. So when I say less than 4-to-1 risk to reward or a minimum of 60 pips, then that means that I can't have, a 30 pip stop loss and then a 60 pip TP. That's not going to work out. If I want to have those 60 pips, then I need to make sure that I reduce my 30 pips to like 10 pips, right? Or 20 pips or something like that, right? It makes me focus on every time I take an entry, I'm making sure it's after I've got my confirmation that price is going to continue my way. And it makes me make sure that this is going to be kind of like, I guess, a controversial way to put it. But the way that I literally think about it is if I took this entry and I, for whatever reason, I couldn't place a stop loss, would this trade still go my way? Right? And that's the confidence I want to have in my trades. Another thing that you had mentioned, I forgot to mention earlier, was, your exit. So I don't have the exit written down like you do. But another thing that I do different is I don't cut half when price goes against my way. That's another reason why I keep my stop loss very tight and it makes me focus on my risk a lot, is because if price goes the other way, then I need to have a stop loss already at a level that I'm comfortable with. If I'm closing 50% when price goes the other way, mentally and emotionally, I'm 50% less confident in that trade. I'm already 50% more uncomfortable in that trade, right? And that's how you get back into that emotional cycle, right? A lot of people, they say like, how do you not be emotional? And that's one way to do it. Be confident in your trades when you go in. And hopefully these trading plans here, so you're going to see the differences that Stefanos and I have and the similarities as well. So hopefully this helps you create something of your own, grab ideas from both of ours and then create your own and think about it like an analytical way. All the markets are is simply data. That's it, right?
Visual data.
Yeah, and all you're doing is analyzing that data. So keep it as analytical as possible.
Yep. Two things before we finish. Now you said, like if it goes, the opposite way, you're not going to cut 50, you're going to close the full thing. Now, do you trade based on lot size or do you trade based on percentage?
Risk percentage. All my risk percentages are
That's fine.
previous day's profits.
So
Simple.
you'll go, you'll just cut the full thing if you're uncomfortable with it.
Yeah. So there's actually a joke that goes around in our mentorship. One of the students started, and she says Sharma and her 5 pip stop loss, which is true because a lot of my trades, they're around that, those pips. My stop
Yeah,
loss is 5 pips.
tip amount. Finally, also, like, how I was saying that we have multiple, things that you can write right over here where it says like 1 to 2 opportunities, a couple other things. One thing that you do want to write down is a question that you want to ask yourself at the end of every session, and it's, am I proud with the decisions that I made in this session? And that's a very powerful question that you could ask yourself after every single session. It's going to help a ton when it comes to like the end of your session. You're analyzing the performance that you did. You're looking at trades that you could have taken, the ones you should have taken, the ones that you missed, all that stuff. Very important question that you can ask yourself after every single question and after every single day. It doesn't have to be with trading.
There you go. That's the only red one here. So you guys, shouldn't be missing it. But absolutely, these are the questions that you should be asking yourself after every session. And I would say, like, at the end of the day, too, whenever you're done, just implementing the same things that you learn in trading, implement the same thing outside of trading. Yep. And that's kind of where you build your character. Trading is a small part of your life. It's not the end all or anything like that. Like I guess Stephanos, I'm gonna go ahead and ask you this question: is when you got into trading, did you get into, or did you at any point think that, okay, well, once I become successful in trading, this is it. I'm not doing anything else ever again. Like this is where my financial freedom lies.
No, it's just a tool to get to the next spot.
There you go. Yeah, so these are the things that we keep saying over and over and over again, that trading is not the place where you're going to rely on and say, this is where I get my financial freedom. It's going to contribute to it. It's going to teach you skills. It's going to teach you analytical skills. Trust me, like I'm doing the master's in analytics right now. There's so much that I've learned from this market that I apply there in that program. Yeah. And there are people who have been data analysts or data scientists or business intelligence analyst or whatever it is for so many years. And I get to talk to them and they're like, yeah, we didn't know all this stuff until we started the program. These are basic things that you're learning here. Yeah. Analyze the market. Keep it in an analytical way. There's no room for emotions. If price is going the other way, why are you getting emotional about it? Cut it in half. You know how it goes. Right? You have the standards for yourself.
I hope that helped you guys. Glad to do it. Another great video that you guys can all learn from. Hopefully you guys were taking notes, and these are trading plans that you can use for yourself and pick and choose, just like strategies. Pick and choose what you like and add it into your trading plan.
Yeah, and keep testing it. Anytime you're unsure of something, go paper trade it, right? Anything at all. If you're trying to get into like fundamental analysis and all you've been doing is technical analysis, write down the notes on your chart, right? Okay, this is what's happening from a fundamental perspective. Crude oil came out better than expected. Or, OPEC meeting was there. People just got up and left. They didn't come to a conclusion. This is what I'm anticipating the price will do. See if it goes your way or not. If it does, analyze exactly how did the fundamentals play into the technical analysis. If you're trying to pick up a strategy that one of us, put out here, maybe it's a 5% equity increase, paper trade it, or maybe it's, the 2-hour time frame. Not a lot of people do that. Paper trade it, things like that. Studying candles, paper trade it.
Exactly.
Well, I hope there's at least 1 or 2 things that you guys can pick up from here. And then as always, feel free to reach out to both of us with any questions and we'd be more than happy to help you out. And I will go ahead and put both of our contact information at the end of the video as well. So, you could pause it, take note, and then reach out to any of us.
Sounds good.